Hello everyone, welcome back to my channel. So in this video I'm going to show you I would say almost miraculous escape that we had during today's trading session. I'm recording this video on Monday. The markets are already closed. We are now in the post-market trading, and as things stand at the moment, we basically everything went all right. So we did not have any losses, but we were in a situation in which we would be able to we could have ended up with a pretty sting in our tail when it comes to losses. But to explain basically what happened, I'm going to try to give you a timeline as accurate as possible so that you can understand basically what happened. And so if you can see here, I'm going to switch here to show you the trades that we did. And so basically I'm going to try to show you in parallel basically what happened so that you can see it right here. So this is a chart of the QQQ, and this is the 1 day trading session. Yeah, so basically you can see it. Now, as you can understand, and I'm going to show here the time. I think I can put this in. Yes, so this is the time that we have to work with. All right, so this is it. Now, this is all set up and ready to go. Now, in terms of the timeline, as you can see here, we sold these calls here basically when the market opened at 2:30, and so we sold these calls, and as you can see here, the price basically went up, so it went against us, and basically there was a time at which we were having unrealized loss on these calls that we sold. But then, as the price progressively came down, we began having unrealized gain in these three contracts that we sold. And by the time we reach this area right here, it was basically around this time, as you can see here, at around 6 o'clock. And this is the time at which we basically bought back these calls, because they basically reached 1 cent. So this happened at 6:02 here, and so basically it was around 6:02, and this was the time at which we bought back. And because we or I felt that the market would not move significantly from this point onwards, what we basically did is sell these calls here, but at a lower strike price, of course 484. We received 8 cents. We keep in mind we sold them immediately after, right? So it was at exactly this point in time, 6:03 here, and at that time, due to other circumstances, I could not monitor the market. All right, so I had no idea from this point onwards. I had no idea basically what happened, and I recall that at right around this time I saw that right around this time I saw that the price started to come back. It started to come to around 480, 481, and around this time here 482 here, more or less around this time 482. So the price started to slowly to come back. But then at this point in time, I felt, because this was the point at which I could not monitor anymore, and at this point in time I felt, all right, there's nothing I can do. The relevant strike for me is 484. I'm already at a loss at this point. I may have to close the position, but if I have to do it, I'm not going to close the position now, because the calls, since they have a lot of time, relatively a lot of time until they mature, they still have a lot of money or time value in their premium. So there was no point for me to buy those back at this point. They were very expensive by this time, or relatively expensive. I would have a realized loss on the calls, and at this point I had no idea basically what the market was going to do. So yeah, at this point I could not continue to monitor the market, so yeah, I left it. I let it go. But then at this point right here, right around this point right here, this was the point, more or less half past 8, yeah, in the evening. This was the point in time at which I came back to see what was going on. And surprise, surprise, the price was almost at 485. I missed completely this portion here. As you can see, the stock price reached the high of 485.84, which I completely missed it. I was not looking at it. But at this point, I felt, all right, we are in trouble because there is little time left until the market is closed, and the price of the calls at this point were around $1 each. That means that if I have to buy back those contracts, those 3 contracts, I would have a loss of $300 to buy those back. Of course, less the premium that I already received, which, if you recall, were 8 cents. So I received $24 already, but I was facing a potential loss of 300 or an expense. I would have to pay around $300 plus a commission to buy those options back. But I decided, all right, let's wait because there's still some time left, and from here until the end of the market, until the closing of the market, a little bit the rest of the time value still contained in the premium would be gone, and that if the price stays constant, the premiums would go down because the time value would disappear. And so I decided to wait, but then, as you can see here, the price became the highs of this sort of up and down, the highs were progressively lower. And not only that, but I started to notice that by around this time, as you can see, this was the decisive point in which the market simply went down, but then the volume picked up. And when I saw that the market was coming down with increasing volume, I felt, all right, this may be our chance to see what the market does, and if this may be our chance to get out of the trade as soon as possible. And I was still a bit reluctant or under the expectation what's going to happen, but even though these upward movements came, I felt, all right, but these movements are much less strong than these ones because the volume was lower. And so I expected that, all right, we are already close to the strike price. Let's see what happens. I'm not going to do anything. I'm going to wait and to see what happens. And then all of a sudden, I don't know what happened, but all of a sudden the market just plunged with higher value, as you can see here, and the market just came straight down from about 484.50 and just came down to 483, and the price, or rather the premium of the calls, just plummeted. Now at this point, what just happened was the premiums started to come down to around 20 cents, 25 cents each, And even though, of course, if I would if I would buy those calls back at that price, I would still have a loss, a small one. But I decided to wait. And then, as this situation happened, and because we are already so close to the 9:15, and at 9:15 it will the markets close at 9, but these options are allowed to trade until up until 15 minutes later, so at 9:15. And so I decided by this point, all right, let's just put an order to close the position. And I decided to put, not to be too ambitious, I decided to try to buy those options back at 6 cents. And by around this time right here, and it was around this time exactly here, that because this strong candle happened, the market came down, and it came down to around 482 or 482 90 something, 483. And at this point the calls were just this trade here, this order that I input was executed. And yeah, basically I breathed a sigh of relief when this happened. I don't know why this happened. I haven't seen the news yet, but this was a situation in which I was facing a $300 loss in my face, and yeah, for some reason this didn't happen. And so we had a small gain. I felt all right. There are still 15 minutes left in the session, but given this huge movement, I was not sure if what's going to happen from this point until the end of the trading session. I decided not to take my chances and not trade anymore. And yeah, basically that's the reason why you see no options in here expired already. So because the trade was basically closed. And so yeah, this was a really miraculous escape, because I have no idea what happened. But yeah, this is a proof that the markets really can go against you and can really literally, yeah, spit on your face and crush you. But yeah, we'll live to fight another day, and we will continue with our strategy. But there's a lesson to be learned here, and the lesson is, now that apparently the tide is turned, and when I say the tide is turned, is that the panic mode that took over the markets over the last few weeks here, as you can see over the past month, yeah, the panic that took place in the markets at around this time apparently is no longer the case. Markets have basically stabilized a little bit, so it's possible that there will be some recovery over the next few days. And so I'm going to be a little bit more conservative, uh, when it comes to roll over these positions, buying back the calls and then selling back at a lower strike price. I'm going to be a little bit more careful, because if the markets continue to behave like this, we will be there. There will eventually be a situation in which we will not be that lucky as we were today, and we will have to face a loss, and we don't want that. And so next time we will do this. We will roll over positions, but much closer to the closing of the market. Certainly not at 6 o'clock, unless the market plunges and it's basically in panic mode. And we know that even with this with a lower strike price, for sure the market will not come back. So we'll have to keep that in mind. But yeah, we'll see. For the time being, this is all. Feel free to leave your comment section and let me know if you ever face a situation like this, because I think these are the situations that really makes you learn about the risks and the thrill that this brings to you. And yeah, also feel free to like the video and subscribe to the channel. And yeah, I'll see you next time in the next video.